Hey yo, welcome back to the LPR Trading Group YouTube channel. It is Dave. We got another video for you today. What I want to do is I want to talk to you guys about our pre-market trading plan and how it was executed throughout the day. And I'll also show you a couple trades that you guys could have taken today. Today is February 1st. I took a few trades. I did not take them all, but let's start by going over our pre-market plan here. It was a large filled up economic day here. If we look at the calendar, we've just got junk everywhere, which makes it really difficult for us traders to execute any trades. But we work our way around this and we make do. 10 o'clock was wildfire with ISM and Jolts. Then we had crude at 10:30. Then Foamix statements at 2, and then we had a press conference at 2:30. So it was really tough to wiggle in and out of trades today because on days like this, we don't want to be trading around these events. So it doesn't leave a lot of time to trade. Today we will get into our pre-market trading plan, and on days like this, I like to try and keep it really simple. So keeping this day extremely simple, we have so many equal events today, like I just stated. It's going to be weird and difficult. Levels I'm watching are 4095 to 4098, 4066, and 4050. Okay? If price breaks these levels and surpasses them, we just go back to the drawing board and we figure something out. I'll show you a chart here that I sent out. Pardon me for the phone call there. I'll show you a chart here that I sent out. This is the chart I sent to the group. Let me just pop this open here. This marks out the levels that we're talking about here. So that's 66, 50, and then 95 to 98. Okay, if we get rid of this, I can pop up my quant tower for you here. And we'll actually go to, we'll stay on a 5-minute chart here. So we'll stay on this 5-minute chart. This is the open here. Okay, so this is the open, the 930 open. This little dotted line is one of our levels here. This little dotted line is another level. And I didn't drop in this area. I'm on my PC right now, and I was trading from my laptop today, but it was at 9.5 to 9.8. Okay, so how can we work out trades on a day like today or any other day for that matter? Well, we've established two areas that we're really looking at or really interested in. And these are typically areas, these bigger picture areas of their areas of interest. Areas on the chart where there wasn't many transactions done. And I know it's a bit counterintuitive, looking for large transactions completed, point of controls, high volume areas. We do this as well. But on the flip side, there is also lower volume areas that we could be looking at on the chart, right? And sometimes these identify as really, really nice areas to get into trades or to mark as an area of interest anyways to keep an eye on for the day. So let's go over the first trade I like that is not based off any stuff that we had marked out, just simply based on intraday price action and how we're moving and some of the stuff that develops throughout the day. So the trade that we're going to talk about here is getting short into the 4080s here. Now, how do we get short into the 4080s? Well, if you guys have watched my previous videos on volume, footprints, delta profiles, this is how we're going to get into this trade. So with our market lawyer mindset, what do we do here? Now, delta profile changes as the day goes on. The reason I'm doing this video today is because this stayed roughly the same. We can see that we have large delta profile here that is blue, which means more aggressive buyers were hitting contracts at the offer in this area than sellers, okay? And this developed through this. Okay, so this is telling me in this area, buyers were really aggressively trying to get long here, hold price, and push price back to and through the highs. What ended up happening here is once we formed balance or structure here, sellers or buyers gave up and sellers pushed through the low end of this balance or the structure, held lower and pushed lower. Our ideas should automatically flip to short anything back into this area as long as we have multiple pieces of our puzzle, this whole market lawyer mindset thing. So what puzzle pieces do we have? We have these higher delta areas to work off of where buyers were applying pressure and they were not successful. We have a point of control here, so a volume point of control on the day here. And if we go to the 5-minute chart, again, those of you that are watching our videos, you'll know all about this. we have a 5-minute HVC, a 5-minute high volume cluster here. So just between the 1 and the 5-minute chart, we've got 3 or 4 things telling us we can and we should be taking a trade somewhere between the 40.80s and the 40.83s, somewhere in this area. So this is one of the trades that we got and we took today, okay? We were shorting 40.80, 80.50, 81, 81.50, 82, stop above 83. Dave, you're averaging down. It's terrible. I am absolutely not averaging a position down. I'm averaging or scaling into a position. How do we do this properly? Even though this is off topic, according to this video, this is how we do it. Mentally, I say 40.80s is the first place that I want to start scaling in. I want to have a stop of somewhere between 8 and 10 ticks, okay? So if I scale, we'll just keep it simple, 1 MES contract in at each one of these levels, 80, 80.50, 81, 81.50, 82. By the time all these get filled, what is my average going to be? My average is going to be 81. Okay? If my stop, so average is 81, if my stop is 83.25, I'm risking 9 ticks, right? So this is the difference between averaging down and scaling into a trade. I still have a defined stop, whereas if price pushes up, fills my orders, and blows right through 82 or 83, I'm just stopping out of the trade for a 9-tick loss. That's it, okay? So we ended up getting in front of this trade. We got a really nice piece, and it moved all the way back down to our HVC, which it LVM, which it previously held. Now, this dotted line were the lines that I showed you within the plan. Now, if we can see how well we held this area here, what I'd be doing on a trade like this is I'd be doing the exact same thing. I'd be layering out some orders down in this area with a defined stop of between 8 to 10 ticks after my average was filled. If the trade fills me and we're holding here, I can aggressively add some more at the market as we're moving out and away from this area, okay? Also, you can sit on your limit orders, let those get filled, and you don't have to add any more. I typically only limit in somewhere between 25 to 50% of my position, okay? And then I'll market the rest in after we hold form structure and push away. So just off this level that we established in the pre-market, we got like a 15-point trade off of it. That was great. Another trade that developed during the day, we get another 15-point trade to the downside back to our key level that we marked. The day gets really slow. Why? We're going to FOMC. Liquidity's thin. Nobody wants to trade. Everyone's just waiting for the news. The idea is wait for the news, right? So news hits and we go crazy, right? Economic event hits, we go absolutely bonkers. What happens when we get back down to our 51 area, 40.51? Again, this is an area that we picked out and we established in the pre-market, right? So for 50, 75, 51, same thing, 66. This is an area we established in the pre-market. Where does price go? Price finds itself going all the way down to the 51. So what can we do in this case if we're going to take this trade? We could layer it at the 51, 50.50, 50, 49.50, 49, depending on your size, maybe more, right? Put your stop 2 to 3 points below that, wherever your average is going to be. You survive this trade, and what do you get? Your average would probably be, I don't know, 50 or 49.50, something like that. Let's just say 50 to keep it easy, and we move all the way up, 100 points. Did I get 100 points out of this trade? Heck no. I got 25 points out of this trade. I got 25 points out of this trade. I was in the 50s. I was all out into the 74s. Okay? But this is just how you can plan your trade out, follow your plan, and do this over and over and over again, guys. If you learned one thing from this video, I hope you learned how to scale into a position and scale into it safely, as well as planning trades out. Number one, pre-planned trades. Pre-planned trades being trades that you take or plan in the pre-market or the night before, like these levels or areas because price hasn't got there yet. And two, trades that develop during the market open or while the market is playing itself out, because these trades or there are a lot of trades that will develop as the market's playing out. We see, areas like this where price pushes up. We get high volume into this area. Buyers got met with sellers. Price turns around. This is all how trades develop and play themselves out during the day. And guys, all it takes is time, just time on the charts. Put your time in, study, 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 study. We talk about this every single day in the LPR community. A lot of you guys that watch these videos are in the LPR community. We appreciate the support so much. We hope that you guys are learning. It's absolutely fantastic. A video that we might have coming up is one of our members in the LPR trading group joined end of last year, and he said he hasn't had so much success in trading as he had since he's been in LPR. Something just clicked for him. There's very small things within the group that are clicking for him, and maybe that's just what he needed to put himself over the top in his trading career here, and it's really helping him. If we can help one person, I mean, that's absolutely amazing. So I hope you guys enjoyed the video. As always, like, comment, subscribe. These are a few trades we took in the room today. We'll see you guys on the charts.